What is going on? Like always, let's get right into the video. There's three different variables when you're looking at the market. I tend to notice when price impulses and then you have a nice little retracement back, a lot of you will notice price then continues up, right? This is a normal cycle, something that we see happen quite often. This happens pretty often on the chart. And another cycle I notice is there'll be when price impulses up, but then also, retraces and consolidates upward. And whenever this happens, price tends to impulse back down. So we have price impulsing up, retracing down, and then going up. And then we have price going up, retracing up, and then going down. Overall, I tend to notice these two patterns play out a lot. And then we have another one that usually happens, which is when price impulses, and then you can also have price impulsing straight back down. And you'll see this a lot. This happens a lot, and a lot of traders get stopped out because they will try to enter because they see price shooting up high, and then they immediately get stopped out. So an example like that would be here, because here we have an impulse up and then an impulse straight down. So a lot of you might try to enter, somewhere up here. This price, you see it's going out, and then it immediately stops you up. So it's really important to look out for these, and I'll show you how often these happen in the market, and it will help you determine, because if you see price impulse up, consolidate up, you can expect price to probably push down. And there's a reason for this, and this is the kind of secret part that I want to talk about. Is it is so important to pay attention to the imbalance of a market, because the market is very random, and it's also very even. The market will always try to be perfectly random and even all at the same time. That's why so many traders struggle. And the edge that you can bring to the market is knowing how to deal with these imbalances. And this is exactly why these three things happen all the time. So for example, we're gonna go with this. The reason why, if price impulses and then consolidates up, the reason why we can expect it to come down is because we have the imbalance of price impulsing up, and we have another imbalance of price still continuing up, but in a consolidation type of way. So now we have two negatives. So now we have two positives. We have a positive, like a plus movement. So the positives are going to represent bullish movement, right? So now we have two bullish movements. We have a bullish impulse, and we have a bullish consolidation, retracement, whatever you want to call it. So now there is a major imbalance, and price should at least, at the very minimum, price should at least try to bring a negative back into the market, which is either price impulsing down, or can be price retracing down. Somehow the balance needs to find place back in the market, and that's why we usually see this kind of thing happen. Now, the reason why you see this happen a lot is because you have a plus of the market moving up and a negative of the market moving right back to balance. Now this is perfectly balancing itself out. And from here, that's why here we can either see price continue down, or you could see price retrace back up and then continue down, whatever it chooses to do. But this usually balances itself out. Now with this, you have a positive, right, from the impulse, and then a negative from the retracement. So from here on, we usually have a positive that follows, right? Because here we have a perfectly balanced market, and then price will continue. So I'm gonna pull this out because I know some of you like to screenshot some of this stuff, keep it in your notes, whatever you'd like to do. So I'm gonna keep that there if any of you want to screenshot that. So we're gonna now go to the markets, and we're gonna look at some real examples and how I use it combined with my strategy to have that edge in the market that we all look for. Now, if any of you are looking for a solid broker, I highly recommend signing up with Hanko Trade. They are very excellent. Their withdrawals are really good. Spreads as low as 0 pips, leverage up to 500 leverage, especially for your scalpers out there. If you want to sign up with them, go ahead. My link will be down in the description below. All right, now we're gonna get to some real examples. We're gonna show you how often this actually happens. So first we need to define an impulse, and then we need to define a consolidation. So an impulse, and this is very handy to use a MACD because it will help you to determine the difference. Here are my inputs, here's my style. Cool. So an impulse is when price moves straight up and doesn't really make many highs or lows. It will usually go from a low, so like here there was a low on a MACD, to a high, something like that. Now this made right here a couple lows from the red, but because it's only 2, I'm not going to count it. So this might be a little bit of a confusing example, so I will find something else for you. So like this is the opposite. We're going to go from a very high to a very low. That is an impulse move. Now a retracement or a consolidation move is when you see price move from one low to another high, but within that we have multiple lows and highs going on. As you can see on the MACD, we have a low, a high, a low, a high, a low, a high, and a low, all before we reach up here. Now this is a perfect example because as we see, as I showed earlier, now we have a negative and then we have a positive. So now this is the market balancing itself out. Within this move to this move, the market has now balanced itself out. And something that will really help, and a lot of you guys like to use the Fibonacci retracement. If you mark from the very top to the very low, you want to see the retracement and the consolidation come back to this middle section from the 0.382 to the 0.618. If it comes back and consolidates in this section, you know price is now balancing itself out, which is very good. That's what we want to see. So from here on, then we can see price continue. And as you can see, price then continues down all the way here. So now, for those who know my strategy, what am I looking to do? Well, I'm looking to mark out one of the lows and wait for price to break that low and come back into an entry. So price broke the low, and now I'm waiting for price to retrace. I look for price to come back to an order block, or I look for price to come back to some liquidity, some consolidation. So price never actually ended up coming back to our spot, so we would have never been able to enter the trade. But I know some of you might have entered the trade, some of you may not. But either way, it continued in the direction that we wanted, and that's exactly what we want to be doing. So yeah, now we can literally look at any point in the market and count out these positive and negatives, right? Here from the low to the very high, that is a positive. From here to here, we have a negative because price is consolidating back to here. Take our fib, bring it all the way to the top. As you can see, price comes back perfectly between the 382 and the 618. And then we see a continuation after that. Now we're going to look for examples of when we have a double positive or a double negative. All right, so here we have a great example. As you can see, we have this impulse down, right? And we're going to go from the top of this high to the bottom of the low. That is a negative. And then we have a consolidation downward, which is also negative. And then as you can see, price likes to impulse back up to balance out the market and add another positive back in. And as you can see, if we use our retracement tool, go ahead, look at this for yourself and see what happens. Now we have another negative here. So now we have 3 negatives, so market will most likely balance itself back out again. So to make up for these 3 negatives, we need to add in 2 more positives. And as you can see, we have a positive move up, and then we have an impulse up, which is now this from this section here to this section here. This is now a perfectly balanced market because we have 3 positives and 3 negatives. So like I said, the market is always trying to balance itself out, as you clearly see here. Take a look for yourselves, play around with it, and see how you can incorporate this in your strategy, whatever strategy you choose to trade.